Very good morning, everyone. In this video, we're going to see AFM top 10 theory questions, which is going to be very handy for you. So let's quickly get going. Ready? 3, 2, 1, come on. First one is irrespective of time horizon, investment and financial relations perform various functions. What are they? First is continual search for best investment opportunities. Next is selection of best profitable opportunities. Next is determination of optimal mix of funds for the opportunities and establishment of system-oriented control and analysis of results for decision making, future decision making. For example, so the first three, if you see the first 3 points, the catch term is opportunities, and next is internal control, then results for future decision making. If you watch it 2 to 3 times or 2 times is enough, there is no way you're going to forget these questions. But if you are not seeing these questions, it's very difficult to write, and also you will not get the marks. So maximum 1 mark you will get. So that is why I'm specifically sharing this thing, so that it will be very handy for you, especially at this juncture. So make full use of it. What makes an organization sustainable? So the previous item, what makes an organization financially sustainable, was asked. So that is the main reason we can emphasizing on this question. Have clear strategic direction, be able to attract, manage, retain competent staff, get community support, then be able to scan its environment and context to identify opportunities for work. So once your base is settled, you need to keep evolving. For example, 2026 goals, you need to keep expanding the verticals, then only employees will also grow. So that is the main reason we can scanning the environment to identify further opportunities for work. Now have an adequate administrative financial infrastructure and also be able to demonstrate its effectiveness and impact in order to leverage further the resources. So these are the various things that makes an organization sustainable. Moving on to the next. What are the various applications of blockchain? First is financial services, next healthcare, next government, next is travel industry, next is economic forecast. So government is at government freedom. So there are various instances where that is the technical decentralization is necessary, but politically should be governed by governments like land registration, vehiculation, etc. So these are the various things. Let's quickly summarize it. First is financial services, next is healthcare, next government, next travel industry, and economic forecast. And in case of healthcare, blockchain provides secure sharing of data, because patients' data should be confidential and they are going to be used for various illegal purposes. Also, how the health status of the country and all those things. So that is why safeguarding it is all the more important. And briefly elaborate the securitization concept in India. So first is, so it is first it was introduced, it was came to the picture by Citibank and many organizations followed. So in order to encourage securitization, the government came with Surface to tackle the menace of non-performing assets. So then it kept on growing, and also recently CRISIL estimated that securitization market volumes may reach near pre-pandemic highs of 1.9 trillion. So once the macro situation and interest rates stabilize, so securitization may also become a key funding source for non-banks who look to grow their loan book, etc. So it is an attractive investment avenue. This is the various trends in securitization in India. So that is what you should write. So these are the two key questions from securitization. In case if you want to cover more questions, I have covered it separately 3 weeks back, and you can refer that video as well. So next is, in context of startup, what are the various challenges faced in implementing succession planning? First is founder mindset might be different than corporate mindset. Next is premature for startups to implement business succession, and founders are the face of startup. These are the various challenges that a startup will face in implementing succession planning. Next is risk management. What are the various hints that indicate there is a counterparty risk and how to overcome it? First is hostile action of foreign government, failure to obtain necessary resources to complete the project. The project will be left in the middle just like that. Any regulatory restrictions on the government let down by the third party have become insolvent. What are the various techniques to manage counterparty risks? The shortcut is CURD, carrying out due diligence. Next is U for use of performance guarantee. R is for rapid action in the event of any likelihood of default, and review the limits and procedure for credit approval. D is for do not overcommit to a single entity or group or current entities. So spread your financial thing so that you don't get caught up with only one single party or one single country, from which there will be any political restrictions and all those things, maybe due to terrorism or any other case as maybe. So these are the various techniques to manage counterparty risk, and every attempt one question comes from risk management, and this attempt counterparty risk is all the more important. So moving on to the next. What are the various objectives of sovereign wealth funds? So first is protection and stabilization of the budget from excess volatility. Next is diversify from non-renewable commodity exports. Next is earn better returns than returns on foreign exchange reserves, and also increase savings for future generation and fund social and economic development. Then political strategy and ensuring sustainable long-term capital growth for target countries. So these are the various common objectives of SWF, as popularly called as. What are the methods of hedging interest rate risk? So what are the various categories? First is traditional, next is modern. So traditional is as follows, that is asset liability management and FRA. Modern methods are interest rate futures, interest rate options, and interest rate swaps. And to those who are not aware of the question paper pattern, most likely question 6B comes from swaps, expenses, flows, collars, and all those things. So you can refer those questions if required. So moving on to the next question. Why traditional methods fail in startups? So thing is, the methods, that is the income approach, asset approach, market approach. So in asset approach, two reasons why this approach does not work is because startups have negligible assets, because a large chunk of their assets is in the form of intellectual property and other intangible assets, and valuing them correctly is a challenge, because most likely it will be very tricky, because investors will find it very difficult, and startups are new but usually operate under the going concern assumption. So their value should not be limited to the realizable value of asset today. That is very, very important, because a lot of the efforts has been put in by them. And if you see income approach, majority of startups operate on assumption of not generating positive cash flow in the foreseeable future. So this business model, if accepted and normalized by the investor, by the community as well, so there are no minimal positive cash flow. It is definitely going to be very cumbersome to evaluate correctly, because when the cash flow is negative. So these are the various the challenges with traditional methods fail, that is income approach, asset approach, and market based approach as well. So moving on to the last question, what are the various characteristics of venture capital financing? The shortcut is HELL, HELL. First is I risk, E is equity participation, L is long-term horizon, and L is lack of liquidity. So I risk is venture capital, they will be very ready to take any risk. It works on a principle of high risk, high return. So high risk would not eliminate the investment charge for venture capital. E is equity participation. So venture capital would be investing in the form of equity. It helps the venture capital participate in the management, help the company grow in the decision making, and also a lot of board decisions can be supervised by VC. So another L is long-term horizon. The fund will invest in long-term horizon, that is minimum period of lock-in period will be 3 years, maximum is 10 years. Next is and last L is lack of liquidity. When VC invests, it takes into account the liquidity factor. So it assumes that there will be less liquidity on the equity it gets, and accordingly it will be investing in that format. So they add the catch term of lack of liquidity is they add illiquidity premium in the price and required return. So these are the various 10 questions, focus questions, which you can't skip for AFM theory. Make full use of it. Watch it 3 times, watch it 4 times, quickly make all note of it. Do FR, but whenever in between you slow down, you take a breather, you do these things, so that once your FR is over, you'll be starting with the AFM theory with full control. So keep going, best wishes, all the very best.